Good evening, ladies and gentlemen. Welcome to Business Today Television, the best place to be for all things market. Today is not only a historical day when you look at indices. The Nifty and the Bank Nifty are, of course, at record highs, and we've seen a very, very sharp rally coming into Indian stocks. Today is also the day when the SGX Nifty ceases to exist, and we have a new instrument called GIFT Nifty, which will now be traded out of Ahmedabad. With us today is an honored guest, Mr. Ashish Kumar Chauhan. He's the Managing Director and Chief Executive Officer of National Stock Exchange, the country's largest bourse. And it's a pleasure to host you, sir. Welcome to Business Today Television. Tell us how you feel and the few reasons that came into your mind to shift this most important futures instrument from Singapore to India.
Thank you, Shail. It's a pleasure and honor to be speaking to you today on this momentous occasion of Guru Purnima Day, and of course the day on which the SGX Nifty has been transferred to GIFT City in Gandhinagar, which is an international finance service center. The GIFT City International Finance Service Center was set up long back under the vision of Honorable Prime Minister Shri Narendra Modi ji. When he visited Singapore in 2007-8, that time he decided that if Indians seem to be there managing those financial service centers in Singapore, UK, US, Hong Kong, Dubai, why India cannot have its own international finance service center? And that's how this idea fructified when he became Prime Minister. And that's how the IFSC in GIFT City near Gandhinagar, Ahmedabad was set up. And since then, almost 2014-15 onwards, we have been trying to set up connectivity to the rest of the world in terms of raising bonds for India's growth. Indian capital markets, Indian companies have been raising bonds, almost $75 billion plus. Bonds have been raised and listed on GIFT City IFSC. But for any IFSC, the fulcrum always is a stock exchange where a lot of trading happens, and that's what India's main asset class, which is the index. Nifty index is the largest traded index in the world, and it also is the largest traded instruments in the world today. Some portion of it for offshore part was getting traded in SGX, that is Singapore Exchange, for over 20 years now, and that's where it was decided between two exchanges and two governments in around 2017-18 that the orders being placed on Singapore Exchange would come to the GIFT City, and they will be matched here along with the orders coming out of GIFT City itself. And that's where the project started in around 2017-18, and today it has culminated into complete transfer of all the orders coming out of Singapore from wherever in the world. When people place orders on Nifty index onto Singapore Exchange, they get transferred onto GIFT City transparently without even the user coming to know of it, and they get matched against the orders coming from GIFT City or other orders from SGX itself. And that is a first time in the world collaboration between two countries trying to compete but also collaborate, and the settlement will continue to take place with the Singapore customers as if they are trading in Singapore, but actually the trading is happening in GIFT City. So this is a unique way of doing things, but eventually the GIFT IFSC had to have many components to be called a vibrant IFSC, and the main reason or main purpose was also to get the SGX Nifty here into GIFT IFSC so that a single pool of liquidity can be created, and what we call onshore the offshore market, that our markets had gone
Mr.
offshore.
Chauhan, let's just take this into three parts. I just wanted to know how, according to you, will traders in India, this is an increasing demographic profile. We've seen young people come into trading, and all of us without fail start our day in the morning by looking at the SGX Nifty quote, which gives an indicator of how the Indian markets open. About 21 hours will be available for Indian traders to hedge their positions after the main markets close at 3:30 p.m. Apart from that, what all will change for Indian traders since SGX now starts trading out of Ahmedabad and not Singapore? Let's take it for traders first.
Traders who are trading in India usually would not be coming into the GIFT City because GIFT IFSC is actually an offshore jurisdiction as far as India is concerned. It trades in dollars, and normal Indian entities are not allowed to trade here except when they transfer using a liberalized remittance scheme of RBI up to $250,000 per year. So in a way, this is for the high-end traders or high-end investors across the world who have interest in the Indian markets. But naturally, that flow, which is available to trade on the GIFT Nifty, would also somewhere through other means, when the FPIs have the registration in both Singapore as well as the domestic Indian markets, then they may be able to arbitrage between the two markets, and that's where the Indian markets will also become more deeper. But the other side, there are around 60 brokers of Indian origin who have now set up shops in GIFT City, which is actually a separate jurisdiction, and 40 more are in pipeline. So those people will be getting their customers from across the world to come here and place more orders, and that's where I believe it's going to be a more intense competition for liquidity, and also it will create a much larger pool of liquidity into the GIFT IFSC.
Wonderful. So while domestic traders who are retailers may not benefit that much, it's the deep-pocketed ultra HNI HFT trader which the NSE and of course the government is targeting, bringing that business from Singapore into the Indian subcontinent. Ashiji, you've been at the helm of NSE for about 3-4 years now, and before that you've done a stellar job with the Bombay Stock Exchange. How do you think this shift from Singapore to Ahmedabad augurs for the National Stock Exchange? We are also very anxiously awaiting your initial public offering, sir.
So in a way, the first and foremost job of the exchanges is to act as the frontline regulator, and the GIFT IFSC is a unique jurisdiction which is away from Indian jurisdiction, and so there our exchange uses our own technology which is provided by NSE, but it is called NSE International Exchange, and there they need to follow the regulations which are created by the IFSC authority of GIFT City. They are slightly different, they are more international in nature, and they are designed for competition with the rest of the world, that is Hong Kong, Dubai, London, New York, and so on and so forth, not exactly competing with the local situation. But as far as the IPO is concerned, we do not have any information yet from our regulator. Once they are comfortable giving us the approvals, the mechanical process is what the exchange officials will be able to complete. But in terms of getting the approvals, we think our job is to continue providing the best, most regulated, most liquid, consistently running fair, efficient, transparent, orderly, and extreme low-cost markets to the Indian population, so that the wealth creation happens, job creation happens, and overall the efficiency of capital and capital formation happens in India.
Mr. Chauhan, don't you think because you get a 21-hour window here in India, and of course a lot of at least thousands if not lakhs of ultra HNIs already trade both overseas and domestic markets, the shift of GIFT Nifty to Ahmedabad will actually also result in increase of domestic trading volumes on the National Stock Exchange? Am I correct?
In a way, the pool of liquidity increases because even when SGX was trading initially, it helped NSE domestically create a much larger pool of liquidity, because there are arbitrage between any two markets, and that is what probably may happen between the GIFT Nifty and the Nifty domestic. But that remains to be seen. As you rightly said, the ultra HNIs and also the institutions which specialize in arbitrage, the HFT, that is high frequency traders who are actually multinational in nature, they may also add to the liquidity on both sides, increasing overall efficiency of the market participants and their capital going forward.
Okay, those were wonderful discussions on Gift Nifty. Mr. Chauhan, let's shift focus on how the market has functioned, and congratulations from Business Today's side. We've seen a record high coming in successively over so many months and so many weeks, and every single system, whether it is margin collection, whether it is orderly settlements, whether it is bank debits or credits, have happened flawlessly and wonderfully well over the past so many months. That also adds to a lot of credibility and reputational gain that the National Stock Exchange at the moment is enjoying. Tell our audiences, how do you see the exchange flourishing over the next 4 or 5 quarters, or over the medium term, simply because newer and better derivative and index instruments are to be introduced on domestic bourses?
See, in a way, the stock exchanges play many roles in an economy. One of them is basically allowing instruments for trading, but the touchstone of any exchange's ability to help economy in which it operates is basically how does it help create more capital and also raise capital for young companies as well as old companies when they require. And so the capital raising is a very important function. In addition to that, the capital formation, the way it represents the Indian wealth is also very, very important. Today, despite our low per capita income of around $2,500 or $2,600 per capita, we are a very robust market. We are now the fourth largest market with market capitalization in the world after US, China and Japan, with $3.6 trillion of market wealth. That wealth is almost 33% of India's total wealth. So in a way, people who invest in stock markets are trusting promoters or the management of the companies that whenever the profits happen, they will get their share of the dividend or profits. And that's a great leap of faith by Indians to invest in each other. There are now more than 72.5 million, that is 7.25 crore investors, accounting for almost 5 crore households. India has close to 28 crore households, and we already have 5 crore households dealing directly in stock markets, investing directly into stock markets, which is almost 17% of India's population now connected to stock markets, which is a great number. It's almost 4 or 5 times more than what was there, say, 10 years back. And that is also showing you how India's new middle class is investing its new savings into the financial capital instead of gold or silver or real estate. And
Wonderful.
that's basically also helping create more jobs, providing more capital to the industries. And that is what basically is allowing them to also have better returns. So overall, it's a virtuous cycle that has been created over last 8-10 years with all the automation that has happened with Jan Dhan, Aadhaar Mobile and other things. And
Wonderful.
I think
Yes.
it's here to stay. We'll have more and more people investing in the markets going forward.
Yes, and full benefit and full credit to institutions like the National Stock Exchange, the Securities and Exchange Board of India, to make the country's markets completely harmonious without fault, and doing a fabulous job. Mr. Chauhan, since you head India's largest exchange, on behalf of investors and traders who form a part of the daily lifeblood of the exchange, I just wanted to ask, what are the new things, new products and new systems that the NSE is likely to launch somewhere over the next 6 months? Do we see weekly stock futures? Do we see new indices being allowed to trade in futures and options? What is in your pipeline?
In a way, our focus is more on regulations, and our regulators also want us to be frontline regulators which are more effective. So our current focus is, of course, we'll continue to launch newer indices, like, and also there might be some changes in the days of expiry and so on and so forth. We have plans to do come back with the Nifty IT index, probably a pharma index. There are also talks about the government bond index futures and options, and also the corporate bond index futures options, and so on and so forth. But more importantly, we want investors to understand that if they have the ability to understand, if they have wherewithal and also risk management capabilities, then only they should participate in derivatives. Otherwise, they would be better off investing in equities market and for long term. Because sometimes due to the social media or even through other media, we tend to get an impression that buying in the morning and selling in the evening is called investments, or trading in derivatives is called investments. It's not. And
Wonderful.
That's why all the new investors, specifically small investors, we want them to understand that they need to invest for long term, either themselves or indirectly through mutual funds, but don't participate in risky instruments if they don't understand those instruments.
Wonderful. That's a great way to give us a game plan on the indices that are there in the offering as far as futures and options and derivatives are concerned. So maybe 4, that's Nifty IT, that was already traded earlier, Nifty Pharma, a government bond index, and maybe something on the interest rate side as well. Thank you, Mr. Chauhan, for joining us and taking your valuable time off to give us details on how this wonderful gift from the National Stock Exchange is likely to change India's investing horizon as well as thought process over the next few months and a few quarters. All the best wishes to you, and we hope it's a resounding success, just as the National Stock Exchange and other indices have been over the last 25 years. Thank you for your time, sir.
Thank you.
That's it, ladies and gentlemen. Do stick to markets today, your first and only hold for all the great stories that are happening in our world, especially on the stocks and equities side. Thank you for joining us.
If you like the video, do like, comment, share and subscribe.